Time now to go across to Mr. Kapish Jain. He's the Group CFO at IIFL Finance, joining us on the show. Hi, Kapish. Thank you so much for making time and speaking with us. Wanted to begin by asking you about your home loan because that forms almost 33% of your AUM. The growth has been strong this quarter, but the question is it sustainable? Because there's this worry about the higher interest rate impacting affordable housing.
Home loan is very diverse in this country. Every geography, every market has its own nuances, and then the demand supply really changes there. So we can't color everything generically with the same picture. With that, there is immense demand. The big picture definitely suggests that the mortgage to GDP in India is fairly low compared to any of the developed and developing market. You really need to penetrate and be present in those markets and have to have a good understanding on which is the customer segment, which is your niche core segment which you need to address. With that, you would be able to get the mobilization of the businesses and the expansion that you are looking for. Interest rates now has actually been settled. So interest rates are not increasing any further. While we see that globally some of the markets have increased their rates, in India we still don't see that the rates will go any further. So people have well understood that the rate cycle is on a hold. Property markets have also gone on a hold. So therefore, both the aspects are fairly predictable. With those aspects in mind, people then are able to take a more conscious call. So while there could be certain markets where you might have seen some slowdown, which is more closer to the urban market, but as you penetrate deeper, there's a premium amount of demand for both self-consumption, self-construction housing assets that somebody wants to build, and even for the projects and the primary asset that they want to build. Affordable housing, we are not necessarily in a very low ticket affordable housing segments. We are still in that 15-20 lakh affordable segments, which is fairly demand exists for them. In a very low market, this demand might have just little subsided. But in the operation of the market where we operate, we see that the demand fairly exists.
Kapish, let's talk about the other part of your business, your gold loan business, which is 32% of AUM, but again showing good growth and has scaled up well. Versus other gold loans financiers. How is the business, is it sustainable, the growth going ahead?
Yeah, I think this growth should be sustainable ahead as well. As you would have noted, we have added a lot of our branches in the last 2 years, close to around 800 to 900 branches. These branches are still very nascent. These branches still needs to come up the curve. The market share that these branches are capturing in the location where they are operating is still quite low compared to others. So these elements do suggest that there is enough market that they can still capture, and that should help us in our overall growth. So we think that our outlook on the gold space and the growth aspects is fairly achievable.
Kapish, but we understand that there are higher yields when it comes to the MFI as well as digital loans, right? Given that you are seeing a bit of an increase there, how's the overall yield at the portfolio level expected to move?
So, if you see our spreads, it has further moved by around 10 basis points from March. That's on an overall basis. That is helped by some of the high-yielding assets like what you rightly mentioned, which is my digital loan and the microfinance. I think today these businesses are rightly priced. We don't see that there's an opportunity to hike in further. And at these levels, we should be able to monetize good quality businesses. So from an outlook perspective, it is just that you will see that the overall yield in the portfolio might just inch up marginally because we have raised our rates more in the middle of last fiscal. So as the old book matures and the new books come into the portfolio, the overall portfolio yield might just show some improvements. But overall, these portfolio yields is something that would stay, and we don't see anything going up significantly from a new customer onboarding perspective on the yield side.
Kapish, the NBFC overall as a space have been reporting compression in margins on select accounts because of borrowings, cost of borrowing issue. Has that panned out similarly for you? We observe it in some other names at least. And what's your outlook on spreads from here on when the rate scenario either is flat or slightly on the downside?
On the cost of borrowing, we have a very active treasury. We do very closely look into all our borrowing options and work on our pricing on a continuous basis, which is about repaying any of our high cost borrowing, which is there, looking into opportunity to tapping into new sources of funding at a lower price, and best monetize on the balance sheet with regard to ILM to see if there's scope to borrow more on the shorter window without taking undue risk and maintaining decent level of LCRs. We do tap into that as well. So our cost of borrowing quarter on quarter has gone up by around 16 basis points, which is fairly decent because bulk of our borrowing is from banks, and banks have increased their MCL in the last 1 year. Effect of it just comes with a lag. So therefore, some effect which came in Q1, which resulted in overall borrowing going up around 17 basis. But the boarding yields have even improved higher. So therefore, the spreads have even expanded. We think we should be able to maintain these spreads. From time to time, if the rate cycle moves higher, we should be able to pass on our rates to our customer in the segment we are operating, more particularly in the housing piece and also in microfinance as well. But as things stands out today, we don't see that rates are going to go up any further. It should stay here for some time before we see cycles coming down. And with that kind of outlook, the spread should be maintained.
Thank you, Kapish, for joining us on the show.